Hey, morning everybody. Welcome back to the channel. And today we're going to be talking about the relative strength index, known as the RSI, and how I use that within my trading. So if you're unfamiliar with what RSI is invented by J. Wells Wilder in 1978. There's a picture of Jay down here, and then it was introduced in his book, New Concepts in Technical Trading Systems. So what it is, RSI is a momentum oscillator that defines when an asset is either overbought or oversold, and that overbought or oversold is relative to the asset itself. An asset's overbought when RSI reaches a level of 70 or over, and it's oversold when it falls below a level of 30. And then just like most technical analysis concepts, RSI works on all asset classes, whether it be stocks, bonds, cryptos, or commodities. This is just how RSI is calculated. If you use any modern trading platform, it's going to calculate it for you anyway, so it doesn't really matter. But just to give you a little bit of background on how this calculation is derived. So RS, this is what I was talking about, how it measures the relative strength of the asset compared to itself. So it's going to take the average of the last 14 days up closes divided by the average of the last 14-day down closes, and then you're going to come up with a value anywhere from 0 to 100, with 0 being the highest value possible, 100 being the highest value possible, and 0 being the lowest value possible. Now, I just want to stop. Most people that use the RSI don't use it correctly. Asset prices trend, and because RSI is a derivative of price, this means that RSI is also going to trend. So what most people do is when the RSI hits an oversold level, that's when they think it's going to bounce. They think price is going to start going up from there, which, it can very short term. They also think when price hits an overbought level, it hits a 70, that's when you should start shorting. But if you know anything about the fat tail principle, you realize that stock price, asset prices are not normally distributed. You can see outliers on how long price can remain overbought or oversold. So that's why you want to use RSI the same way you would any trend trading strategy. Assume when something is overbought, it's going to stay overbought, and assume when something is oversold, it's going to stay oversold. So here's kind of what I'm talking about in this. We're going to look at a bullish regime. This is when we're getting consistent overbought conditions. This is Apple from earlier this year, back in February. Earlier in February of 23. So you can see we got our first overbought reading here in February, and then we never got an oversold reading for this entire time. We just kept seeing more overbought, more overbought, more overbought. And that really continued for almost half the year, all the way from February until the end of July. So this really goes to show that it's not great to try to time a top when you're getting these overbought readings. If you would have placed, if you would have tried to short this stock when it went below this 146 level, you would have instantly been blown out because it shot higher and then it continued higher. And if you held short because you thought that, an overbought reading is a reason to go short, you would have lost a ton of money when this thing went to $194. Next up, we have NVIDIA. Same sort of thing. So what constitutes a bullish regime is price can hit an overbought, and as long as it doesn't go oversold, that's where you're going to see that bullish regime. So even though price went down after we hit our overbought here in late July, we never saw an oversold on the RSI. So as trends progress, you have to assume they're going to continue. We never saw a trend reversal. If something goes from overbought to oversold, that would be your trend reversal, letting you think that the oversold is now the regime. So we get this overbought, price falls, but then it continues to rise higher. We finally start getting more overbought signals, which we assumed we would get since we had the original one here. And then just like Apple, NVIDIA continues rising higher. If you would have went short here, you would have got blown out, lost a ton of money. And then finally we have Meta. This is from 2016, I believe, when it was still called Facebook. We get our first overbought here in late January. And then this one just keeps ripping. We never even see really a down move at all. We get a little bit down here. but never hits oversold, and we keep ripping higher. This one lasted for 187 days. So you can really see how long these trends are going to persist. These are over half-year trends. NVIDIA even went 194 days. So this allows you to really, profit from a large trend. If you want to be a more longer-term trader, some call that a position trader, you can hold, you can buy a breakout after we get overbought and then hold that until we hit another oversold, or, you can use whatever, trailing stop loss or stop loss you want to. But this really just goes to show you that, like price, RSI is going to trend, and you do not want to fight that trend. And then on the flip side, we have a bearish regime. This is when oversold conditions persist. So this is Tesla back in 2022 when we had our most recent bear market. After hitting overbought here, you think things are going to persist, but then we get oversold. Overbought trend is over. We're now in a bearish regime with the oversold reading. And if you know anything about kind of market cycles, you know that bullish regimes are going to happen more often just because price tends to go up about 70% of the time, with that other 30% being when we're in these bearish regimes. So what that means is you can see this one is a lot less. This is only 108 days of this bearish regime just on this page. And just kind of like with overbought, we see oversold persisting. This one first hit oversold, we'll call it around this 210, 220 level. And then we ended up going all the way down to, $100. So that's a 50% decline in 108 days. And you never had any reason to go bullish on Tesla here, just because you never saw an overbought reading. RSI trends, and the bullish regime persists. Next up, we have Google. Here's another. We go from overbought here in early 2020, and then we hit oversold in the COVID crash. This one lets you know at $67 that, hey, we're in a bearish regime right now. You should watch for price to continue declining. We went from $67 down to $50 in about 39 days. So even though we had a huge run up, Google was letting you know that the RSI wasn't there to back up any of these higher price moves. And we saw that there. And then finally, we have Microsoft. So this one hit oversold in late May, and then it pretty much just went sideways with a little bit more price action. So we hit a high of 31, and then we fell all the way down to 26. So this one lasted a lot longer than the other two we saw. Tesla lasted around 100 days. Google lasted around 40 days, but this one lasted 200 days. And while we didn't see the magnitude of price decline that we saw in the other two, we did just see pretty much straight to down price action, which is wasted money if you're trying to go long this stock. It's opportunity cost at its finest. You could have been placing your cash in something else, if you're trying to go long, but it also lets you know hey, maybe being short isn't bad here either. We retested up here around this 31 level, never got overbought, and then we instantly just kept falling and falling. So not only does it warn you of when prices are going to fall, it can warn you of when prices will just trade sideways. So a lot of different ways to look at this one. As long as you remember that RSI is just like price, it's going to trend. That'll save you a lot of time trying to buy assets that are in downtrends and trying to sell assets that are in uptrends. The next way I use RSI is with divergences. So what an RSI divergence is when price and RSI are trending in opposite directions. What this signals is that the current price trend is waning and could be due for a reversal. Bullish RSI divergence is when price is making lower or equal lows while RSI is making higher lows, and then bearish is when price is making equal or higher highs, while RSI is making lower highs. So let's take a look at some bullish ones. This is Eli Lilly. So you can see here in early 2022, price was falling. We're making lower lows here, and then RSI is rising. So what you could do here, kind of how you would trade these is, you could place a buy stop around this 254 level. After you see that, the RSI is starting to buck the trend. you can place your buy stop, and then once it moves higher, that's when you'll get in. And the reason that these divergences take place is because RSI is a momentum oscillator. Um, it gives you warning when momentum is shifting. So if price continues grinding lower, but RSI is moving higher, it lets you know that in this case the bears are um, not in control anymore, or at least they're starting to lose control. And if the bulls can get price above a certain point, then it's going to let you know that they are in fact taking over. There's kind of some conflicting information in here that I want to go over. So we did get this oversold reading, so that lets you know that we're in a bearish regime. But once you start seeing, this divergence occurring, it lets you know that, hey, there could be a trend reversal here, and then we do see that overbought continue. So divergences will often let you know when that trend is going to end, even though the regime hasn't ended because the overbought or oversold switched. So that's a real nuance. You have to get good at spotting when these trends are going to change. So you don't just blindly buy RSI, buy price when RSI is making a divergence. You really have to read the chart and know what to look for and know what price the asset is going to have to trade at for your trend reversal to confirm. Next up, we have a little Coinbase action. So this one is a little bit better since we never got oversold. This lets you know that our previous regime is still intact. It's probably bullish anyway. So you can see price falling, RSI is rising, and if you go back, that was a pretty steep move. This one's pretty steep and a lot longer. So the steepness of your higher lows in the RSI is really going to let you know if price is kind of just a little bit falling or even a little bit sideways. That's fine and dandy, but what you really want to see is a pretty intense angle on the RSI rising up to the right. That's going to let you know just how weak the bears really are, and if the bulls can get price above a certain level, then you're gonna see that breakout's coming. So even though we got this gap lower here in June on Coinbase, the RSI did not confirm that move lower, and in fact, we cleared that gap pretty easily on this date right here. So if you could get above that 64 level, that's going to be kind of your trigger to get long. And then, we front ran this overbought reading because we knew that the bears were starting to lose control. And then finally, we have ARK. Like I said, RSI works on all asset classes. This is a equities ETF, so it doesn't even have to work on individual equities. It can work on ETFs, ETNs, what have you. It's all the same. So here we are again, front running an overbought condition. We were in oversold. That was confirmed here again, but the RSI was telling you that, hey, some divergence is taking place and you need to start looking for an opportunity to go long if price can confirm that. So if you were really aggressive, you could have got long on this gap up here around this $38 level. But if you're more conservative, all you need to do is play the base breakout. So you could have got long here around this, we'll call it 42 level. And again, you're already front running the overbought. So you're going to get ahead of some of those other late traders that are waiting for that signal to occur. And then on the other hand, we have bearish RSI divergence. This is when RSI is falling while price is rising. This is Apple. So, I mean, just higher highs, lower highs. That's really all it comes down to. This gap would have been a perfect opportunity for you to get long or to get short Apple here. And then here's Bitcoin. RSI is falling, price is rising. This one looks a lot more like that Microsoft chart that we were seeing with the bearish RSI regime. So even though we were in overbought, we were making a divergence that let you know that the bulls were definitely waning, and that waning doesn't have to immediately go down, but it could just go sideways for a while. Even though we did get this huge dump here, you had a couple opportunities to get short this one. You could have got short around this 29,000 level, and then you could have, covered your short around 26,000. And then finally, we have Roku. This is the ones that I really like. This was a kind of a longer longer dragged out divergence. But this one was a lot steeper, and it was pretty evident, just how exhausted the buyers were in this case. RSI will let you know how exhausted people are if you're seeing these huge divergences. And we went from 460 to 310 real quick just because the momentum wasn't there anymore in Roku. And that's really what these RSI divergences are going to tell you. They're going to tell you when the trend is possibly coming to an end. And if you are savvy enough to know when price tells you that as well, that's how you're going to be able to front run these overbought and oversold regimes. So that's kind of just a down and dirty on RSI. If you guys got any other questions, feel free to put them in the chat. And thanks for watching.